Hi, everyone, and welcome to this week's installment of Mish's Market Minute. I am your host, Mish Schneider. And this is obviously thanks to StockCharts that I get the weekly opportunity to talk to you all. So we thought that we would do something about Earth Day. April 22nd is Earth Day. And considering the environment and last week's video, which was about electric cars, and a lot of the buzz that we're hearing from the Federal Reserve and also from the government in terms of what we do about the energy crisis and how we can eventually get to some kind of clean alternative is very much in focus. This Earth Day, this particular year, seems to be a bit more auspicious in terms of bringing it to the minds of people. So essentially, what I want to do here is go through a whole bunch of different charts, but I do want to say that at the end of this video, you will then hear a conversation that I had with one of the StockCharts TV producers, Sky Boggs, where we talk about more the history of Earth Day, the history of social consciousness types of investing and governance investing, and where that all came from, and then kind of what to do about it, how to look at it in terms of going forward. So I hope the combined videos of me going through these particular charts and that interview that Sky and I did together will be something of value for you to listen to, not only for Earth Day, but for time going on. So let's get started with the charts. So we're going to start with the VanEck investment grade floating rate ETF, FLTR. And so the reason why this came up is because there are a few bonds that have been issued, as we talk about in the interview, that deal specifically with socially conscious investing. And that's obviously the whole green energy space is part of that. It goes beyond that. So this bond was created to take advantage of that. Now, considering as I'm talking to you, the market is having a bit of a meltdown, it's no surprise to see that this has been in a bearish phase on the daily chart and is having some issues here as the market is melting down. But what is interesting to me is that it is on our leadership outperforming the overall benchmark. But if we look at real motion, you could see that we had that one quick minute of divergence here where it started to break over the 50-day moving average in momentum. And this is why, for those of you who have the plugins and those of you who should get the plugins, we never would have gone long because the indicator gives us the heads up in terms of the divergence, but you need the confirmation of price, and clearly we didn't get that here. So what we would be looking for is, as the market is coming off, if the market stabilizes at some point, and this holds this low here, this historical low that we have at 24.94, if that continues to hold, and you can see it's really not that much farther, this doesn't move with much volatility, would it be an opportunity to get involved in that one? And another one that's very similar to that is FLRN. FLRN is also an ETF dealing with social consciousness investing in a bit better shape of what we just looked at. So it did try to clear the 50-day moving average. Interestingly here, it never confirmed. Remember, we look for 2 closes over the 50. So we didn't get the 2 closes, plus the slope on the 50 is negative. However, you can see as I'm talking to you, it made the attempt today and is having a slip along with the market, also outperforming the benchmark, and was doing better without the price confirmation on momentum, has come off a little bit with the overall market, no real diversion. So this would be another, if you're interested in getting started, to keep your eyes on. And then a third one would be FLOT. And again, better looking, almost, and the day is young as I'm talking to you, but almost got a confirmation here. So if it closes over 50.55, that would be a confirmation. So perhaps this would be the one to go to, particularly as we see the momentum above the 50. So that's a good sign. And we see the leadership going on here. So of all of them so far, this would have the most interest, with probably the tightest stop under that 50.50 level. Now, if we move on from there, we have SUSA. And this is an ESG ETF. This also in better shape. Now look, we have not as great a leadership, kind of on par, and it's coming off here in momentum as it's coming off in price. But what I love about all these charts is that you have sort of a triple effect that you can look at, not only the leadership indicator, but you could look at the momentum. And then all you have to do simply is get some kind of confirmation in price with the momentum, and you've got yourself a good trade if this is the kind of area you want to start investing in. The next one is DSI. And that too looks very similar, not quite showing leadership, never quite cleared the 50 in momentum, coming off a little bit, but also other than the confirmation that we had here, which really, no, excuse me, that wasn't confirmation. It was higher over the 200. Here you had a quick move up, but this is why you always need a macro perspective. It's come off with the overall market, obviously. So again, now that we're testing that 50 and we couldn't quite hold it as it's coming off, this would be another one that now I would wait for the momentum to switch and the price to get back over that 50-day moving average. The next one after that is ESGV. And I don't want to be repetitive here, but again, all of these seem to be extremely the same. They've all tried to work around the 50, except for that one that actually cleared the 200 DSI, haven't been able to make it. Momentum might have looked better, but momentum is not strong enough in this one. Even on the one day when it did clear the 50, you got the confirmation there, but you would have gotten quickly out, let's say, if you did it now. But the more important thing is you can look to see this is shown actually weakness against the benchmark. So it needs to actually come back, outperform the benchmark, come back in momentum, and come back in price. Probably they're all going to look very similar because they're all measuring kind of the same thing. Okay, so the next one is ESGU. It's an ESG, which again is socially conscious investing, more involved with corporation. And again, that interview will explain it. But this is also very similar to everything we've seen so far. So I guess the moral of the story is that these may be holding up a little better, particularly the ones I showed you at first, the FLOT, the FLRN, and the FLTR, because they're outperforming the benchmark. But they do obviously, no matter what's happening, follow the overall market. And you know how many times have I talked to you, unless you're doing counter trend trading like commodities, for example, always good to understand what the overall market is doing. So again, if the market starts to find some level of stabilization, this actually did kind of chop you up over that 50-day moving average. And yet, even though it cleared the 50-day moving average here and here, never showed any kind of great leadership. So in these things, it's probably best to wait not only for it to show that it's outperforming the benchmark, but that you have all the indicators in place. And then if the market is also doing well, this is really what these are going to be great instruments. Now, another one I've traded lots of times has been TAN, and happily did not get involved with TAN lately, because of the overall market scenario. I mean, really that simple. We had the thought that TAN would do well with rising gas prices, but right now that's not in favor. And again, with Earth Day, that could be, obviously not a great thing, especially those people who are concerned about what we're doing to the planet. But I'm not going to get into all of that. It's just interesting to see that right now TAN is grossly underperforming even all of the instruments I just showed you. And it's miserably failed the 50-day moving average, the leadership, and the momentum. So what you could start to look for on this one, if you're interested in, would be a mean reversion trade, which means it would have to clear back over the price. And you could see as it's tackling the Bollinger Band here on our real motion indicator, it would have to either break it and come back through. And then you could say that all this congestion of price that we saw right here becomes a level of support for you to look at. But right now, it would be hard to touch. Same thing with water. Another one. Now, this actually looks better because this is a pure commodity play. So what I would look at potentially is not only the leadership, the fact that it's holding up in momentum, although it could do a little bit better. It has cleared the 50. If it confirms today and holds up over 52, this might be a place to go. Let's say if it clears this Bollinger Band this week or next week over that 52.75 with a simple stop right under this 51.98. So I actually, of everything I've showed you right now, this might be the most actionable, and it's an ETF related to water. Now, Tesla reported earnings. Tesla definitely falls under the auspices of a socially responsible type of investing. It reported earnings, and I'm not too surprised with the pressure of the market that you would see this thing go up and then come back down. But if this gets any kind of decent sell-off, always a good place to look at first. Now, the momentum is definitely declining here as it's under the 200 and under the 50. In fact, ahead of the earnings, it didn't quite even ever clear the 200. So now it looks to me that this may actually also follow the market and at least give us a test of the 50-day moving average, but Tesla's always a good one to watch. PBW is another clean energy ETF, and that looks so similar to TAN. Again, you might want to look at this for some kind of mean reversion trade, but right now this is looking pretty weak following the overall market. Another one that deals more with wind energy is FAN. That's actually holding up a little bit better, but you can see now we're breaking down under this 50-day moving average. And so I would watch to see where this goes. Momentum is breaking down too, as is leadership. So it could be that this thing has been a little bit slow to sell off and has more to sell off. But again, if it doesn't sell off or it comes back through the 50, or we can see this hold the 200 in the real motion indicator, get back through the 200, and this takes back some leadership, that could be an interesting place to go. Another one is ICLN, also looking very much like TAN. Although the momentum is a little bit stronger here, I imagine that will go down with today's price movement as I'm talking to you. But I'd look to see what happens here at around 19 because there's been a lot of chart support there. So the next one we're going to look at is interesting. This is an ESG Leaders Equity ETF. So these are tracking companies that are more socially conscious in terms of how they hire, who's running the boards, et cetera. And so with this one right here, I think of, kind of like what I showed you before with PHO, maybe in the best shape, A, showing some leadership, 2, also really kind of following, flatlining on the momentum against that 50. And in price had cleared the 50 2 days ago, confirmed as of the day before, didn't quite get through that 200 and coming off. So to me, what this says is if we hold this 50, you could take a shot there as it starts to move up, or you could very simply wait now for this to clear back over the 200-day moving average and see if this momentum can at least get back through this zero line right here. And the last one we're going to look at is SNPE. Kind of similar. Again, more ESG than clean energy related. Also, underperforming the benchmark. Not doing too bad here on the momentum, but not great. Hanging on to the zero line, but not over the 50-day moving average. Had a death cross with the moving averages. You can see the 50 cross below. And so the price now is starting to fail. But if we can hold on to these more recent levels of around 39, work our way back in momentum over the 50, work our way back in leadership back over the SPY, and then clear, let's say, the Bollinger Bands here around 40, 50, this too can turn out to be an interesting investment. So in conclusion, in terms of the charts that we just looked at, we're seeing some good stuff that has potential, lots of stuff that's following the overall macro, but great opportunities should things stabilize if you want to stay invested in this type of space. Now let's go to the interview.
Hi, Mish. So can you give me a little background on what SRIs are and where they came from?
Hi, Sky. Well, it's such a fascinating area because SRI stands for socially responsible investing. But people think it's a new notion, and actually it dates back to 1758 when the Quakers were boycotting companies that were promoting slavery. The Quakers were classically anti-slavery. It then evolved, if we just kind of fast forward, into the 60s. And of course, we know the 60s and the 70s generation was all about socially responsible type of environment. And so there was a big movement against the Vietnamese War. There was a big movement in favor of women's rights. And Martin Luther King, of course, was at the helm of civil rights. And so all of those areas, and particularly Martin Luther King, were promoting buying companies that supported in the right side of the moral compass and boycotting the companies that were not. So that's really the evolvement of it. The next place it evolved to, it still exists, obviously, SRI, and green energy is a big part of that now. But I think probably the more controversial part of the whole SRI movement, and what you hear a lot of pundits talk about, is the ESG part of SRI. And ESG is the environment, corporate governance, which basically means buying companies that are hiring, particularly heads of boards or CEOs, either women or minority groups. And that's a little bit more interesting in that you're now really going into almost an affirmative action support on one level, but not necessarily really worrying about the bottom line of what that company even does.
So what kind of SRIs, ESGs, ETFs are there today?
I like to look at the ETFs because the ETFs really have a basket of companies that might be involved with some kind of an SRI. And then there are some of the classic companies as well, like Microsoft and Tesla, that are definitely all about socially responsible investing. And so essentially, you can look at a couple of areas. You can look at bonds. There are bonds that actually follow the path of the SRI companies and ETFs. And those bonds are traded as ETFs. So one is FLTR, it's a Vanguard bond. One is FLRN, and the other is FLOT. And then if we also move into other areas, there's SUSA, so that's really more in terms of the environmental, DSI, kind of the same thing, and TAN, which is something that's become way more popular, way more liquid, but that's really tied to green energy, and PHO, which is tied to water conservation. And so those are kind of the main areas that I like to follow and I like to look at.
Okay, great. I love this, how there are so many ways that we can invest in socially responsible ways. But can we make money with SRIs?
Well, it's always, just like you hear people say, buy the companies that you know, could be very positive in a bullish environment, but very negative when the market is going down. And that's exactly what we've been seeing this year, is that some of these big cap stock companies that we all know and have heard about for years are proving not to be infallible to a big market sell-off or higher interest rates or inflation. And the same rule is going to apply to these SRI or ESG companies. They are not infallible to a market turn down. In fact, in some ways, especially ESGs, they may be even more vulnerable if they don't have great balance sheets, regardless of who's at the helm. And also, they're not invulnerable to inflation. So you really have to say, I can make money in these companies if I understand the technical setup, if I look at the overall macro, and if I also really understand risk versus reward. Now, with all that said, let's take a look at TAN in particular, because TAN was trying to go up as oil has been going up. So when I talk about the macro, maybe the one area that might have more ability to go higher in a very high inflationary market that is driven by energy and oil, it would be TAN, which has a lot of solar stocks, because eventually we know that people are buying more electric cars, that people are looking for solar panels for wind energy, and that we have a government now that is actually providing support for infrastructure to support that. So that would be, the TAN would be the exception. But nonetheless, if you look at TAN, it's in better shape than a lot of the other companies I just told you about, but still can be vulnerable in an overall liquidity type of situation in the market.
Sounds about right. It sounds like SRIs are not necessarily any different than any of the other stock that you might be interested in trading or getting involved with. So that being said, for someone who wants to start investing and is very interested in SRIs in particular, or ESGs, what's the biggest piece of advice you'd give to people who want to get started in this field?
Well, again, you really want to know what's happening in the overall market. If you're in a situation like we find ourselves now, where inflation numbers keep getting higher, and the Federal Reserve is getting more hawkish, and free money in terms of interest rates being at zero is now a thing of the past, you have to put that into the equation. So it's always good to kind of know where you're going. Now, if you want to get more specific, because I mentioned TAN, another one, by the way, is water is actually doing better. PHO is doing better than some of these others as well. If you want to get involved, my book really explains this very clearly. You should really understand what phase the particular instrument is. And it's very easy if you just look at the moving averages, and you don't need 50 million indicators on your chart. You don't need MACDs and RSI and volume. You could look at that if that's something that really interests you. I just simply like to look at the 50-day and the 200-day moving averages. It's what most institutions use, and then where the price is relative to that. So if we take a look at TAN, for example, it's above the 50-day moving average. So what does that tell you? The next thing you need to understand as a trader who wants to get involved is where your risk is. So if you're buying something as it's clearing that 50-day moving average, going, let's say, from a bearish scenario to a more of a recovery or recuperation scenario, guess what? If it breaks down under the 50, you're wrong, you get out. If it continues to go up, you stay with the trade, and at some point start to take some profits and raise stops. And that's really sounds very, very basic, and it is. But I would say that probably if you've never traded before, find one of the areas in the SRI space that you like. Maybe it's Tesla, and Tesla is a whole other animal. But if you're a little scared of Tesla at these high prices, which certainly would be understandable, I would look at TAN, or I would look at PHO, and I would become a student of those price movements and those two moving averages and how that all lines up relative. Is it outperforming the overall market? Will it be dragged down with the overall market? Will eventually become a counter trend and go up first if the whole market goes down?
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.